Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Monday, the 19th of October, 2020, just after 5:10 p.m. Central Time. Well, we're reopening. We had a big down day today in the stock market by the end of the day. Now we're getting a bounce in the market. You know, big down day on a Monday could lead to a Tuesday bounce day, and then we go back to trying to figure out where are we, because as of tomorrow, we're 2 weeks away from a series of congressional, local, and obviously the presidential election, a big event. Today, OPEC met, and they're discussing what to do. Now, the words that they leak out, of course, is there was no talk going on about production increases in January. I don't see how they could do it with the way that the COVID is coming on around the world again. I know in America, we're getting to be maybe a record number of cases. Europe, as you can see, there's many areas already closing down. In Chicago, it's all over our news. We may see our city shut down again, go back into lockdown. So this is getting very serious one more time. The first phase never really ended as far as I could see. I mean, it never went away. We were told it would and then it would return. I think it's just been with us all the way through. Metal market's getting a beat back here. Steve Mnuchin, our Treasury Secretary, and Ms. Pelosi, the House Speaker, spoke again today. They're due to speak tomorrow. Ms. Pelosi's going to be on, I believe, Bloomberg at 12:30. I thought it was today. I was wrong in that. She's going to be on tomorrow at 12:30, and I don't know what she's going to say or not say. You know, if they can strike a deal, it's going to be great. I think both sides want it because there's a lot of political capital to be gained out of that. We'll see what happens. You know, everybody's going to blame each other if they can't get it done. While she put a deadline of tomorrow, I'm so used to politicians and their deadlines, I call it all nonsense. So let's take a look at what we've got. In the gold market, we've had a series of corrections back down. Now, the thinking, and that's all that I could tell you is what the thinking. The thinking is if the Democrats take the presidency and the Senate, that there'll be a massive amount of spending. That in turn down the road will first off, the first thing that would probably happen is the stock market rally in part because all that spending would be a good jolt for the economy. Eventually you got to pay for it. The second event would happen with inflation because the Fed's still talking the curve yield. And on that curve yield, the big question is, what does the Fed want to do? If you've been watching the 10-year notes, they keep coming up, but they're not crossing that 0.80. I don't know what will happen if the Fed thinks that the curve yield is getting a bit too steep. We'll see what goes on there. But when you look at the gold market, okay, right now we're up about $5.50 for the week so far. You can see the sideways action that the gold has stepped into. The pattern in gold right now, at least, is one of higher lows and a higher high. Today was an outside day up. That means you took out Friday's low and high and closed higher. Now, I put a lot of credence on what outside days do. The one thing I typically don't want to see in them is taking out the low of that day. If it does, I call it a bull trap, and I look to see what the market's looking at in moving averages, where it's at in relation to key ones. You're on the 18, but to get under it, you'd be under that. So I'd be looking for the 100-day average as a possible downside target then of 1888.50. If it's not taken out and the market can hold in here, well, then I look at Bollinger Bands, and since it wouldn't take that out, what could it mean? Maybe it means you're going back up to the resistance at 1934. But I do put importance on it, and that's what I'm looking at right now. And momentum is not giving me much of anything. Momentum slightly down. You can see the red lines under the blue, which means they call it the K and the D line. The K line, the red line, they're identical formulas. The difference is the time frames in the formula. One uses 3, because it's a daily chart, 3 days. The other uses 5 days. If it were a 15-minute chart, it'd be 3 15-minute time frames versus 5 15 minutes. So it all depends what you're doing on that. When you take a look at gold-silver ratio, It's favoring silver. As long as the market stays under the red 18-day average of closes, means that you're under pressure to drop the number. It means less ounces of silver as you drop to get an ounce of gold. Just recently, as we were back in the March-April frame, you got up to 125. You've cut that, not quite in half, but down rather dramatically. When you look at the silver chart, it's a better looking chart than the gold. You have the higher low, higher high pattern. You didn't have an outside day in this market. Support's back at 24, 21, let's call it 50. Resistance in the 24.50 level. Trend up, bias up, momentum flat. Copper market. Copper has in the pattern here a lower low, higher high. So it's got an embedded reading though. Now let's go back to what an embedded reading is. You can't count tonight, but let's count today. Both numbers were over 80 on today's close. On Friday, both numbers were over 80. Were they though on Thursday? That would determine if it is or isn't. You need to have both over. They were not. So when I say embedded, I've jumped the gun. It's got to stay like this. If it does, it tells me that the pros will be buying this market on breaks as long as you don't barely embed and be near the day's low. Then it's going to lose it the next day. So there's variances, and I talk about them in my morning subscriber videos, but I give you here the flavor of what I do there. So I'm still friendly that market. The platinum market had an outside day down. As long as you don't get over 880.90, the trend of this market is back to the downside. Take that out, and I'll be looking for the 901 level. Trend down, lower highs, lower lows, potential target if it wants to keep dropping, 842.5, but you're already in oversold territory. So I am not looking for the pros to get aggressive on the downside when you're already in an oversold territory. It doesn't mean I'm right, but it's not something I'm looking for. The Palladium chart is a real mess. You've got a pattern of lower highs, higher lows, and you keep hitting the 18-day average. Let it resolve itself. I don't know which way it's going to try to do it. I would say any move under 23.27 is bearish. Any move back over these highs here is bullish. I'm going to wait. I don't see anything to tell you on that. Then we get to the dollar index. And the dollar was able to rally up last night, stay right at that 18-day average, and then let go to the downside. Now, a very key number as I'm viewing this chart is this 92.95 level, the lower Bollinger Band, the 9,300. Crack that, and a lot of traders will say this market's headed lower. Now, the interesting part of that is it sort of flies in the face of not getting a COVID relief bill. If you get a COVID relief bill, a lot of people think the dollar will go down. Better things happening, other economies doing better because of what the U.S. does, blah, blah, blah. Don't get it, and they start buying the dollar as a safe haven. I'm giving you what the common thinking seems to be. For those of you that follow me, you should get our guides, 2 of them, to technical indicators. We put together this with our good friends at Modern Trader and Futures Magazine, and it explains each one of these with detail that I don't think you're going to find in many other spots. It's 23 pages or so for each of the booklets. It's a PDF that we're going to send you. You can either look at it on your computer screen, you can print it out, it's all in full color, and it explains all these different parts to it in a way that I think makes perfect sense. Sometimes I read these different vehicles that are put together. It could be an exchange or other companies. They're so complicated it bypasses the average person. We're not all mathematicians. We want things to come out in a way we get them. How do you get it? Just go to our website under free offers. Take a look on the bottom right. Sign up for that and our other offers. We'll get it into your email box. I'm Ira Epstein. Thanks for watching. I will see you all come tomorrow. Take care now.